All right, this is just a little educational video for people who don't really understand when they get a market commentary from me that says we're trading the ES. So this heat map that you see in front of you is all the stocks that make up the S&P 500. And you can see there's different sectors. There's the information technology, there's healthcare, there's consumer staples, there's industrials, there's materials, telecommunications, utilities, energy, consumer discretionary, and financials. So if you take these stocks, if I go here and I click on Apple and I look at its market cap, Apple's market cap is basically $656 billion. If I take Apple's market cap and I add that $656 billion to Microsoft, which is $388 billion market cap, and I go down the list of these 500 stocks and I take all their market caps, I add them up, I come up with a sum, I divide it by 500, and I come up with an index. And the index is the average price that these stocks would be trading if it was one stock. So when you take a look at the S&P 500, when you see that the market, so the futures market closed at basically 2035, I'm going to add 6 points to that. I'll explain that in a second here. And so the cash market closed about 2041. So if this was one share, it would be basically the average price would be $20,041. $20,041. Now the and this will be another video, but we trade at a discount. So when I'm trading the ES and it's trading at 2035, you add 6 points to 2035 and you come up with 2041. So we're trading the index. So in 1982, when they came out with their stock index futures, the S&P 500 index futures contract was awarded to the Chicago Mercantile Exchange, and that's where the trading of stock index futures began. Also, at then what they did on the S&P 500, they had the big contract, which was one contract. They then instituted an electronic contract that was called the E-mini, and so that's what we trade now. And so five E-minis are equivalent to one big contract, and right now that's where 90% of all the volume takes place in the trading, and it's all basically screen based. So that's the history of what the S&P 500 is. So when people talk about the Dow, here's the 40 stocks that make up the Dow. And when you talk about the Nasdaq, basically the Nasdaq 100, these are the 100 stocks that make up the Nasdaq 100. So it's the same concept. You add up all the market caps, you come up with a sum, you divide it by 100, and that's how you get to the index. And then also we also look at the Russell 2000, which is, you know, a lot of stocks to follow, but we don't do that. We just are looking at what the index is doing as a whole. So all the research that we provide for you is technical analysis based on historical price movement, and hopefully it can be a predictive sort of gauge on where the S&P 500 index is going to go for that day, or maybe that week, or maybe that month. So even though that you may not be trading this, it's a good idea to stay in touch with our social media and our YouTube videos, just so that you got an idea where the markets has been, where we think it's going, and you have some market direction. Even if your investment philosophy is long term, or the fact that you're even putting money away on your 401ks, you might get an opportunity to take advantage of different times of the year where there's market direction is definitely either going down or up. So that's what, when we talk about the S&P 500. It also is the benchmark for the world. So any philosophy or trading strategy out there is always compared to the S&P 500. So if the S&P market's up 8% or 11% on the year, everybody else who has a trading strategy and has a rate of return, they are looking to either outperform the S&P 500, or at least stay abreast of the S&P 500 index, because it's a gauge on the overall health of the economy and the health of the stock market as a whole. So I wanted to I wanted everybody to understand what we do, what the S&P 500 is. I know there's a lot of people who think this is going to be well, maybe not a waste of time, but a basic trading 101. But there are other people, and I get emails every day asking questions that allude to the fact that they maybe are not really sure what this is. So once again, we trade a derivative product of the cash, and the cash is the value of all these 500 stocks added up, divided by 500. You come out with an average price, which is right now in the cash about 2041. In the futures is about 2035, and right now we are looking in whether that index is going to either close higher or lower on the day. So it's the same concept of buying a stock. If I buy a stock, I want it to go up and I can sell it higher. Well, we do the same thing. We can speculate on whether this index is going to, we can buy the index at 2035 in the futures, and it may go up to 2040, and we can get out. So the important thing also to know is that the S&P 500 is used by every major fund manager, every index manager, and what they do is they use the S&P 500 and options people to hedge either option positions or cash stock positions. They try to get a correlation between their portfolio and the S&P 500, and they will put in different order sizes that will eliminate some risk to their portfolio. So that's why it's important for as a derivative product. I, I, if there's any questions about this, you guys just people can just email me at manovermarket at gmail.com. That's manovermarket@gmail.com. All right, everybody have a good day, and in the morning I will be putting out our trading videos, and I will be covering tomorrow the S&P 500 and crude oil, which is basically trading in 48 bucks. So levels that we haven't seen since 2009. All right, everybody, have a good weekend. I'll see you in the morning. Take care. Bye.